Hi, good morning, everyone. My name is Matthew Ayala, and today I'm going to be presenting a little video on how to use your VA home loan, right? Whether it's your first time using it or it's your second, third, or even fourth time using it, you can use a VA loan multiple times. And I kind of just want to cover some of the benefits the military didn't, teach us when we were active duty. So I'm going to cover some topics like the benefits of the VA loan versus other loan products, what it can be used for, how to get qualified, and what buying your first home looks like. So without further ado, let's roll into this. A little bit about me. My name is Matt Ayala. I'm a veteran of the U.S. Navy. I served on board the USS Bunker Hill. She decommissioned in September of 2023, and I was Aegis Fire Patrolman. I got out as E5, so a second class. I'm a mortgage lender on the VA Loan Guide team at Military Home Spot Lending. Our parent company is also called Mortgage One. You may have heard of us. I previously worked as a field service engineer in the corrugated industry, corrugated as in cardboard boxes. So my job was going around the United States and fixing machines that make cardboard. So it was a really interesting experience for me because I got to put my problem solving skills to the test, and I helped a lot of people out there. But ultimately, I had hurt my back on the job and in the military as well. And I bought my home in September of 2023, and I liked the process of buying my home so much, and finally living the American dream as I know and understand it, that I decided to become a mortgage lender in late 2023. And I recently switched full time from engineering to mortgage lending in September of 2024. So that's why I'm doing this. I'm passionate about helping veterans, service members, and first responders, first time homebuyers too, who fight every day for us to keep living the American dream and to start living that same American dream that we're fighting for, right? Also, I have a French bulldog. His name is Baha. He's actually the senior loan officer, so he's doing all of your files, right? I'm not the one actually doing the files. It's this pretty little guy over here, and I'm just the guy that's on the phone. So let's dive into some of the basic facts of the VA loan. So we're going to cover the difference between the VA loan and other kind of loan products like the conventional loan, FHA loan, the down payment requirements, and VA funding fee. Using multiple times, how to go about doing that, and what seller's credits look like. So other loans typically require a small down payment, anywhere from 3 to 5%. Although we do have some first-time homebuyer programs that require 0% down. We have higher mortgage interest on those. We have higher mortgage interest rates. So with conventional loan, you're looking at right now in September. I'm sorry, this is February of 2025. It's about 7%, maybe a little bit lower depending on your circumstances. You have to put mortgage insurance either for the life of the loan with an FHA loan, if you're putting the minimum down payment, or unless you put 20% down, or until you have about 22% equity. There are higher credit score requirements. The lowest we can do on a VA loan is 500. And then you have DTI restrictions as well. DTI basically stands for debt to income ratio. So that's the relationship between how much money you're bringing in versus how much your minimum monthly payments, including the mortgage payment, are. So there's a front end and a back end. The front end is for housing, and then the back end is for your housing and then all your other debts, right? You can't use seller credits to pay off debt for a regular loan. So what that means is basically money the seller's giving you in order to cover your closing costs and buy down your interest rate, things of that nature. You typically need higher cash to close because you have a down payment that's required. And there are max loan limits based on the loan program, right? So if you have an FHA loan, you can only borrow up to 1,077,000 here in San Diego. But if it's your first time buying with a VA loan, there are no loan limits because, well, actually, that's if you've never used a VA loan before. So if you have your full entitlement, as long as you can qualify for $1 million+ loan, there's no loan limit. You can still use your 0% down benefit. Now, VA loans have no down payment required if you have full entitlement, right? They have lower interest rates because they're essentially subsidized by the government. And the way that they're subsidized is they're guaranteed by the VA. The VA is not actually giving you the money at the end of the day. It's private lenders, private mortgage bankers, or mortgage lenders that are giving you this money. And in case you don't make your payments and you default on the loan, the VA is going to give the mortgage lender up to 25% of that. And there are no mortgage insurance requirements on VA loans at all. So that saves you hundreds of dollars every single month across the board. So there are no credit score requirements set by the VA. It's based on the lender. But here with my company, we serve a lot of veterans, especially ones with lower credit scores, and I have a few files, a few people that have really low credit scores, and part of that is yes, we can do them under certain circumstances, but part of that is most banks they only take A paper files. If you don't have perfect income, if you don't make enough money, they just shoot you out the door. So that's not a kind of approach I take, with my profession, and I feel that I at least owe it to every single veteran that I come to, that wants a loan and wants to buy a home, live the American dream, to help them understand why their credit score is so low and build a plan with them. So that way, even if they can't buy a home right now, I can still build a plan with them, and then they can buy a home maybe 6 months or a year from now, depending on their circumstances, depending on how their financial situation is. It all depends on those circumstances. There are also no debt to income restrictions, right? We go based off of residual income. So I've seen debt to income ratios as high as 70%, for our pre-approvals, and we'll still be able to help people buy at that max pre-approval level. If we pre-approve someone with a 70% DTI at $800,000, we can still do that. Although it's worth having a conversation with you when I do your pre-approval. What you're willing to have for a monthly payment. An $800,000 home is pretty big. It's closer to 6 grand. With interest rates the way that they are. And if you're putting 0% down, that's also something you have to factor in. You can also use the seller's credit to pay off your debt too, which is a exclusive benefit of the VA loan. No other loan program has this kind of benefit, right? So if you have, let's say, 10 grand of consumer debt, whether it's on your credit cards, maybe you're just trying to pay off the rest of your car, you can have the seller pay that off, and that'll free up some of your debt to income ratio and make you, be able to qualify for a home you otherwise wouldn't be able to. You have lower cash at close on the same home compared to other loans because you don't have to bring as much because you don't have a down payment requirement. And again, there are no loan limits if you have your full entitlement. So VA entitlement is a little bit tricky. It determines if you need to make a down payment and essentially how much of that down payment you need if you've used a VA loan before. If you've never used a VA loan before, don't worry about this. Or you sold your home with a VA loan and you currently have no properties with a VA loan, you also have full entitlement. You can also refinance your existing VA loan into another type of loan once in order to restore your entitlement too. So this is a once per life thing. Think about video games, right? You can only do this once. You only have this benefit once. So it's worth having that conversation with a mortgage lender like me if the juice is worth the squeeze. Your monthly payments, especially if you have less than 20% equity, may actually go up. But if the net tangible benefit is that you're able to get into a home that you really like with a 0% down payment, and it's going to work out better for you, and you're planning on turning the existing property you previously had with VA loan into a rental property, that's something to consider. Um, and again, with full entitlement, there's no limit to how much you can buy with 0% down, as long as you can financially qualify for it. And after you've used some entitlement, how much you put down goes based on the county loan limit that you're trying to purchase it, right? So across the nation, the county loan limit is typically around a little bit over 800. In fact, it's $806,550, to give you an exact number. And I'll give an example for calculating the entitlement in the next slide. So this is actually my certificate of eligibility. I've blanked out all of my sensitive information there besides my last name, my branch of service. I was in the Navy. So it says here that I have 178,000 ish of entitlement charged to my account, right? So let's say I'm trying to buy in Los Angeles County, right? The loan limit there is 1.2 million, so it's 1,209,750, right? So we're going to divide that number by four, and I get $302,437.50. So I'm going to subtract my entitlement charged um, by how much by the loan limit in Los Angeles County, right? So I'm going to get $123,687.50. So if I multiply that number by four, I get $494,000 and $750. I'm sorry, $494,750. So that's how much I can buy without putting any down payment. If I go above that, for every dollar I go above that, I need to put 25 cents for a down payment. So if I buy a home for $520,000, I put 25% of that difference between 494 750 and the purchase price is down payment. So that'd be about $6,312.50. This is a lot of work for most people. I don't expect you as the buyer to understand this. That's why us mortgage professionals have to know all about VA entitlement because it gets tricky. You know, how much you can put with a down payment, how much you can qualify for without having to put a down payment if that's something you want to explore. Or, you know, if you want to put X amount of dollars, how much can you qualify for? That's something that we can run for you and kind of go over those scenarios and explain how that works in detail. So many people think that VA loans are only for veterans. You can't get it if you're active duty, and that's simply not true. They think that you can't get it if you're in the National Guard either, and that's also not true, right? So according to the VA, you meet the minimum active duty service requirements if you served for at least 24 continuous months, or at least 90 days of active duty, right? Now, what active duty means is that it doesn't count your basic training. It doesn't count any kind of schools that you've been to. So active duty orders, right? So you're attached to a unit, you're attached to a ship. That would count as active duty orders. And at least 90 days if you were discharged for a hardship, a reduction in force, or less than 90 days if you were discharged for a service-connected disability. So I had a service member who was in boot camp, and I think they were in the Army or the Marines or something, and they got hurt in one of the obstacle courses. So they ended up getting discharged from the military with a service-connected disability, and they are exempt from the funding fee, but they're also eligible for the VA loan, even though they didn't meet those other requirements. So it works a little bit differently if you're National Guard or reservist. Um, you have to have at least 90 days active duty orders. Same thing as with the active duty requirements that are up top, or 6 years in either the reserve slash National Guards, provided you have all your points. And we're gonna need your DD 214 and your point statements for this, but we can point you in the right direction to where to get these from. I know, especially if you discharged quite a while back, it's hard to get these records, but we have ways that we can find these records for you. So the way that you qualify for a VA loan is you get pre-approved with a lender like myself, and that comprises of talking to them about what you want to use a VA loan for, your goals, why homeownership is important to you. So the reason why I asked, right, is let's say you come to me, you say you want to buy a home, you want to start your rental property portfolio. Now that kind of changes the dynamic for me a little bit, right? Because if you want to build a portfolio, a single family home here in Southern California, it may not debt service, once you move out, once you PCS, but how about buying a multifamily property, right? And you can do that with 0% down. I'll touch on that later, but that's something that you may want to consider, right? So talking to your mortgage lender and explaining to them whether this is just a home that you really want to buy, if you really just want to get into a home, or if you just want to start building your portfolio and start that with the VA loan. That's a conversation that you should really have. um, After that, you fill out a loan application. You tell us a little bit more about yourself, about your income, your assets, your liabilities, all that. Just it's us getting to know you, getting to know your situation. After that, you're going to submit your documents regarding your income, assets, liabilities, your bank statements, your pay stubs or your LES if you're still active duty, your photo IDs. Just make sure that you're not, trying to commit money laundering or something crazy like that. So then after that, we're going to put together your file, and then we're going to perform a consultation and give you a pre-approval letter, right? That pre-approval letter will essentially determine how much you're pre-approved for on a dollar amount, and it shows agents, whether it's the buyer's agent that I'm going to be sending you to, or if you already have one, and the listing agent as well, that you're serious about buying a home, and that you went through the steps to get financially qualified to buy a home. Pre-approvals are good for about 90 to 120 days. So your bank statements, typically we need 2 months of bank statements. So we may catch you on the very end, the tail end of your month of the bank statement. And credit reports are only good for 120 days, so we have to redo all of that paperwork. But it's not too big of a process. I don't want you guys getting scared, like, oh, if I'm 6 months away from buying a home, I shouldn't get pre-approved. I should get pre-approved like 4 months 4 months before I'm trying to buy a home. It it doesn't really work like that, and it only requires us to see your most recent pay stubs. See if you got any increases in pay, or if you have any new liabilities. By the way, don't if you're trying to buy a home, don't go end up leasing a really expensive car. Not a It's not a good idea. I'll tell you that. So, and then another thing that I do that most lenders don't is getting your pre-approval fully underwritten. Now, what that comprises of is we're doing all the paperwork that gets done when the contract is submitted. When you submit an offer, when the contract's submitted, before all that happens. The reason why is because, as opposed to submitting, like a regular 14 or 21 day offer, or if you're working with some other lender, maybe like 30 or 45, we can get you a 10-day offer, and we can actually perform on that. So we're going to collect a little bit of paperwork, collect a little bit more documentation, maybe some letters of explanation if required. We're going to do all that paperwork up front, so that way you don't have to do all of that, and it'll help you submit an offer faster, get your offer accepted faster, and also compete with cash buyers. Cash buyers, they can only they're limited by law, right? They can close as fast as 10 days, by federal financial regulations, and with a fully underwritten pre-approval, we can also close as fast as cash. And we also make sure your offers get seen, right? So especially in a hot market like San Diego, your offers may not get seen. Especially if you're just at the purchase price or whatever. Part of that's on your agent to submit a winning offer that they think is going to help you win and stand out against all the 5 or 10 or sometimes even 20 other offers that are being submitted. Um, Listing agents, they don't want to relist their home on the market, right? Because it makes them look bad to the seller, and it also attracts a lot of lowball offers from other buyers, right? And also, again, it looks bad to their seller, as if the agent can't perform their duties and vet the right person. So what I do is I make sure that your agent carbon copies me on any offers that they submit, through email, so I can see the purchase contract, and then I call the listing agent. I talk about the pertinent financial details. I explain why you're a good borrower, and the strength of your file. And I stress that if they accept your offer, they will not go back on the market. So across our team, these methods, when combined, has increased our acceptance rate by 70%. So a lot of questions that we get is, do I need a perfect credit score in order to apply for a VA loan? No, you don't need a perfect credit score. You don't need an 850. The VA doesn't set minimum credit score requirements. A lot of lenders, they require at least a 620 for VA loans. They only take 8 paper files, but we only require a 500 credit score, and that'll be, with a score that low, I'll have to look at the file and kind of determine, what the issue is, why you have such a low credit score. But oftentimes there's some things that we can do in order to make you look better in the eyes of an underwriter, right? And I'll give you an example, right? I have a borrower with a 513 credit score, who's trying to buy a home loan, buy a home with a VA loan in Orlando. He recently, or not recently, but he got discharged from the military a while back because a service-connected disability. He has lower back pain, and he also hurt his back again while he was working at his previous job. And he's out of work right now. And because he was out of work and because he hurt his back, he fell behind on some bills. Those are some things that we can explain to an underwriter, right? It's not necessarily your fault that you hurt your back and you had all these things going on. With other banks, they don't care, what the explanation is. They just see the number. They don't care about the story at all, and they just they send you off to do your business, and they just reject you. So I don't treat my veterans the same way, and if I were on the opposite end, I wouldn't want to be treated that way either. You know, Another thing is, can my girlfriend, my boyfriend, my fiance, dad, my cousin, my uncle, my goldfish, can they be a co-borrower on my VA loan even if they're not a veteran? Yes, they can, but if they're not a veteran, they will have to put a down payment. The down payment's around 14% if it's a veteran and a non-veteran, unless they're married. So if you're not married, so even if it's your girlfriend, your boyfriend, your fiance, they'll still have to put a down payment until you guys are actually legally married. So my advice is, get a quick, get eloped real quick, and that'll save you 14% on whatever the purchase price is. Life hack: don't actually do that. I mean, unless you want to. So can I invest in an investment property with the VA loan? By investment property, I mean you're not intending to live there as soon as you close. No, you can't. But that isn't to say that you can buy a home, live in there for a year, and then rent it out, right? That is perfectly fine. So many service members and veterans do that, because life, especially if you're active duty military, you PCS a lot. Like I PCS at least 3 times. I went from Great Lakes in Illinois to Dahlgren, Virginia, and then I ultimately PCS to San Diego, and I did 2 deployments out there or out here. I still live in San Diego. So you can't buy an investment property outright with a VA loan. Otherwise, you'd have to put 20% down in just a different loan program. But borrower, like, you have to occupy the property at the end of the day. If either you or your spouse, or your dependent child or your dependent adult. So if you're taking care of your mom and she's a little bit older and she's legally considered your dependent, that can also satisfy the occupancy requirements. So the VA funding fee, right? The VA funding fee is a little bit tricky. Most people, they think, oh, it's a 0% down payment, but I have to pay this VA funding fee as a down payment as well. That's simply not true, right? You can finance the VA funding fee into the loan, right? Or you can have the seller pay it, or you can pay it, or you can have some kind of combination of both. So for first time use, if you're active duty and you don't have a Purple Heart, or if you're a veteran and you don't have a service connected disability, if it's your first time using the VA home loan, it is 2.15% on a purchase, right? That is with 0% down, right? It changes based on how much down payment you put. So the second, called subsequent use, second, third, etc., time that you buy a home with a VA loan is called a subsequent use. And with a 0% down payment, you'll have to put 3.3% of the purchase price um, as a as a VA funding fee, right? Now, again, you don't have to put that as a down payment. You can roll that into the loan amount, or if you have a Purple Heart, you're active duty still, or if you have a service connected disability, um, that funding fee is waived, so you don't have to worry about that at all. So let's talk a little bit about strategies about buying homes. I want to get away a little bit from the specifics of the VA loan and talk about strategies you can use for buying a home, right? And I'll give a few examples, but I'm going to cover some topics like seller's credits, go a little bit more in depth on how that works with the VA loan, closing costs, fixed rate buy downs, and 2-1 buy downs. So having the seller cover your closing costs, right? Here in San Diego, even though it's a seller's market, prices on homes are going a little bit under asking, and you're also seeing a little bit of seller's credit as well. So what that means is basically money that the seller is giving you. They're enticing you to buy their home, saying, hey, if you buy this home at X amount purchase price, whatever, I'll give you 10, 15 grand of seller's credits. And that's something you can always negotiate, but that's worth having a discussion with your buyer's agent. That's why having a buyer's agent is that knows what the seller wants, what their situation is, is crucial because you want to have someone who's going to negotiate on your behalf, and you want them to negotiate as much as possible in your favor, right? They're a fiduciary at the end of the day, and they're in your corner. And I'm in your corner as well, but I don't I don't deal with negotiating the contract. That is completely on your buyer's agent, right? But I just want to present all this information for you, so that way you guys can get exposed and come up with some ideas with your buyer's agent. Have that conversation. Have an intelligent, informed conversation. So closing costs are associated with your loan. They include the appraisal, title insurance, escrow, prepaid homeowners insurance, interest, property taxes, the origination fee if there is one, discount points, etc. Here in San Diego, that typically ranges about 2.5% of the purchase price on average. Don't take that with a grain of salt. Things may change. And you can always play with that a little bit. You can ask us if you want us to get a higher interest, a little bit of a higher interest rate, and cover some of your closing costs. That's also an option that we have as well. you know but what if you didn't have to pay closing costs, or if you had to pay little closing costs, as opposed to if you're buying a $500,000 home, 2.5% of that is 12 and a half grand, right? What if you only had to pay 2 or 3 grand? So you and your agent can negotiate for seller's concessions. You can get a max of 4% of seller's concessions on top of them paying for your closing costs, right? The way that the VA loan is structured is that closing costs are not counted towards that 4%, right? So you can have the seller pay off your debt. That's something that I alluded to earlier, but I want to talk about that a little bit more. Another cool thing with the VA loan is that they can pay your debt off, whether it's consumer loans, consumer debt, consumer loans, personal loans, auto loans, or anything else that you may have on your credit report. That's capped at 4%. I'm not saying that you're automatically going to get 4%. Again, that's on your realtor to negotiate on your behalf and get the best deal for you. But you're using other people's money to buy a home at the end of the day. That's excellent. That's a really good thing. And having the seller pay off your debt is exclusive to the VA loan. But this strategy is, aside from having the seller pay off your debt, that strategy of having the seller pay your closing costs or buy down your interest rate, that can be applied to any other kind of loan too. You can also have the seller buy down your rate, right? So the way that works is there are a few ones, right? There's a permanent buy down, also called a fixed buy down, where they buy your rate down permanently, or a temporary buy down, such as a 2-1 and a 1-0 buy down, right? So let's say for a 2-1 buy down, right? Let's say you have a 6% note rate. So that means the rate after all the temporary buy downs are gone. Um, if you have a 2-1 buy down, if the seller pays for it, your rate is 4% for the first year, and then 5% for the second year, and then after that, your note rate's going to be 6% for years 3 to 30, right? Well, what if I don't want to pay 6% from years 3 to 30? The VA also has a loan program called a VA EARL, so interest rate reduction refinance loan. So basically, if we can drop your rate by at least 0.5% of a point, so in this case, 6 to 5.5%, we can do it. So we can drop your rate permanently. Now, of course, it's a different loan, so you'd have to refinance, but the closing costs are typically pretty limited, and you don't have to pay any cash out of pocket. We can roll the closing costs into the loan as well. So that's another option that you have, right? And the same thing applies for a 1-0 buy down. For year one, your note rate is going to be 5%, and after year 2 to year 30, your note rate is going to be 6%. All right, let's talk about some ways you can use your VA loan. So, aside from just buying a single family property in your market, there are other ways you can use a VA loan as well, right? So, you can buy a small apartment building, basically a 2, 3, 4 unit, also known as duplexes, triplexes, or quadplexes. You can build a single family property with 0% down. You can also buy a fixer upper and finance repairs for 0% down. And you can also use a VA loan with multiple borrowers or multiple veterans too, right? and that'll give you a lot more purchasing power, and it'll also open up some other things if you're trying to buy multifamily. Now, you can buy a 2 to 4 unit property with a VA loan and still have your 0% down benefit, right? Now, this is really helpful for people that are trying to start their real estate investing journey, but they don't have a lot of money, right? So you can buy above your normal single family pre-approval amount, right? By using 75% of the rental income to add back into your effective income, right? The catch is that if it's above your pre-approval level, it's above what you would normally qualify for, we require 6 months of reserves. The VA requires 6 months of reserves between all of your assets, right? So 6 months of your mortgage payment. So PITI, principal, interest, taxes, and insurance. You don't need to pull these reserves from your assets like your brokerage account, your retirement account, like your 401k or your TSP, but you need to have them there, right? So, for example, going into that effective income, right? Um, let's say the property that you're trying to buy, it's a fourplex. It has an $8,000 mortgage payment, and it's a 4 unit, right? You're going to live in 1 unit. You're going to occupy. You're going to have the other 3 units either with tenants or they already have tenants. So it's $6,000 of rental income between those 3 units that you're not occupying. We don't care about the unit that you're occupying. We care about the other ones that are producing rental income. So we can use 75% of that income and add that back into your income, right? So that $4,500 can go a long way. Now you can also build a home with a VA loan and still have that same 0% down benefit. Unfortunately, you can't build a multifamily property with the VA loan, right? The VA loan will actually guarantee this, but there's no investor, there's no one on the secondary market willing to buy a loan where someone built a 4 family property with a VA loan for 0% down. There's too much risk in the eyes of those investors who buy those loans on the secondary market in order for that to actually happen. I've seen whispers of it happening before, but I don't necessarily believe them. I don't subscribe any truth to them. Um, if you're buying the land, you can already have the land purchased. You know, maybe it's in your family, maybe you bought it a few months ago, you're not really sure what to do with it. Or you can finance that into the VA loan, right? So if you're buying the land and you're building, it's just basically the acquisition cost for the land plus the construction costs for the loan, right? Um, Now, normal construction loans are 12 to 18-month terms and then refinance into permanent financing. But with the VA loan, it's a one-time close, so you don't need to close on the loan again. You don't need to refinance from a construction loan into another loan product. It's all in one loan. And it's also funded in draw periods, and it's interest only while the construction is being completed up until you receive the certificate of occupancy. Basically, a letter saying that you can occupy and live there. The builder needs to be VA approved, but that's an easy process, and that can be done in as little as a week. Typically, if they're not already VA approved, it can be done in escrow. Another thing you can do with the VA loan is you can buy a fixer upper, right? So let's say here in San Diego, right? You can't find anything in the right neighborhood you want for under 700,000, right? Maybe you're pre-approved for 650. You can't find anything that you want for under 700,000. You're only pre-approved for 650, right? Let's say you find a fixer upper, it's 550 in the right neighborhood, in the neighborhood you want to be in, and it requires 30 grand of, let's make that 500, right? That's the example on this slide right here. So let's say it's 500, and the renovation costs are 30 grand. After all the renovations are completed, it's going to appraise at 560. So your loan amount is not 560. The amount that you're borrowing from the bank is not 560. It's 530, right? So when the home is completed, you'll have $30,000 in equity and a home you love, right? Now the thing is, you have to occupy after all the renovations are done, right? You can't. Otherwise, it'd be a fix and flip loan, and 0% down. You're not really going to get a fix and flip loan for 0% down, right? So you have to live there. But it's a really good way to add instant equity just by buying a property that's it's fallen to the wayside. It needs a lot of repairs. Maybe it's not habitable right now with the regular VA loan, but with the renovation loan, you can definitely do it. You can also buy a home with another veteran or service member that has an entitlement, right? So let's say you've already bought a home and you have some entitlement charge. you want to buy a home in the property in the market that you're currently stationed in, but you have to put a down payment, some kind of down payment. You don't want to do that, right? So you can partner up with another veteran, either split their entitlement between you guys, or you can use his entitlement entirely. Now, both of you guys will have to occupy. Both of you guys are gonna have to live there, but you can qualify for more when you team up, right? And if they're eligible for the VA loan, that eliminates the down payment requirement for their guarantee, right? So in order for a VA loan to be guaranteed with a someone that you're not married to that's not eligible for the VA loan, you'd have to put 14% down if it's just you and that other borrower, right? But that eliminates this requirement entirely. So that's another creative way that we can get financing for multiple veterans, whether or not they're related. And I've seen some dual military spouses pull this off too. One might have entitlement charge from a property that they owned, 3 years ago or 5 years ago when they were in Virginia. Now they're here in San Diego and they're trying to buy a property, but they would need to put a down payment if they're only using her entitlement. Also, with multifamily, it gets a little bit more interesting. You can go above the 4 unit um, limit if you have another veteran or another person eligible for the VA loan on your loan as a co-borrower. So from the VA guidelines, if a property is owned by two or more eligible veterans, it may consist of four family units, so four residential housing units, and one business unit, plus one additional unit for each veteran participating in the ownership, right? So let's say you and your friend on the ship or at your unit want to buy a 7 unit property, one unit with a business unit, a commercial unit in this case, and six family units. So you live in one of the family units. The other veteran or service member lives in the other unit, and then you have four other units, right? And it says, thus, two veterans may purchase or construct residential property consisting of up to six family units, the basic 4 units plus one unit for each of the two veterans and one business unit. That comes directly from the VA handbook. That's just not me talking out of my ass. Now, it says construct, right? Again, the VA will guarantee it, but no investor will buy that loan from someone. So that's why you don't see people building multiple units with a VA loan. Otherwise, I mean, I'd be doing that all day with my entitlement. We're going to talk about steps to buying a home, right? So there are a lot of moving parts here, but I'll just kind of condense them into 9 simple steps, right? So the first step is getting pre-approved, right? You're going to get pre-approved, and that consists of filling out the loan application, submitting your documents to your lender regarding your income and assets, verifying that, and your liabilities with a credit report, understanding what you want to use your VA loan for, and then pre-approving you. And then, of course, we always fully underwrite our pre-approvals. And another thing, right? Credit reports, right? Most people they tend to get a bad rap, right? Oh, we're going to pull your credit, blah, 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 whatever. But there are two different types of credit reports that are available, right? There's a soft pull and then there's a hard pull, right? A soft pull is just a pre-qualification kind of credit report, and it doesn't ding your credit score, right? Now, a hard pull, it does ding your credit score, but it's not as much as you think, right? Maybe 2 or 3 points for us. So, and if you're already getting pre-approved multiple lenders, they can within a certain time window. I'm not exactly sure what it is. I think it's 4 to 6 weeks. If they're all pulling your credit, it's not going to affect it because it's the same thing. You're getting pre-approved for a loan, a home loan in this case. So if you've already had multiple hard pulls done, it doesn't hurt your credit score anymore as long as it's within a certain time window. I think that's 4 to 6 weeks. Now, if you're a few months out from buying a home, I'll do a soft pull, and that won't hurt your credit score. But we will need to do a hard pull at some point. So that's something I really wanted to touch on. A lot of people get a lot of bad have this bad connotation of credit reports, and that's simply not true. I kind of wanted to spell that a little bit before we move forward. But now the fun part is you find a home, right? You find a home based on your criteria. You get connected with an agent, right? You should get pre-approved before speaking to a realtor, and most people do it the opposite way, right? When you talk to a realtor that's worth their weight in salt, they're not going to show you any homes until you get pre-approved, right? Because what if you're looking at $1 million homes and you only get pre-approved for, $700,000? That's going to waste a lot of your time. It's going to waste a lot of your realtor's time as well. So getting pre-approved before you speak to a realtor is key, right? You want to do that because it'll save both of you guys a lot of time, right? And if my clients don't have a realtor, that gives me an opportunity to look at whatever market they're buying in, whether it's here in San Diego or somewhere else across the United States, like in Florida, South Carolina, to kind of vet the buyer's agent that I want to send them to, and talk to them, kind of understand like what their situation is, and figure out if they're a right match or not. Now, the third step is having your agent submit an offer on your behalf, right? Your realtor is going to help you craft a winning offer tailored to the seller's needs and the condition of the property, right? They're going to negotiate for seller's credit, purchase price, time to close, your escrow time, all of that, right? So once the offer is accepted, we move on to the next steps of the home buying process, right? That's going to be your earnest money and the escrow period, right? So after your offer is accepted, you have entered the escrow period, right? So you deposit earnest money, and what earnest money is essentially it's money saying that, hey, if I walk away from this house, you get to keep this. It's basically you putting your money where your mouth is and showing the seller that you're serious. This is also when you get your first set of disclosures, including your loan estimate from us, right? Basically showing you roughly, and of course it's an estimate, roughly what your closing costs, what your cash to close, down payment, etc. is, as well as your interest rate too. I know people are very, anxious to see what their interest rate is. So this is the first time that you're expected to pay out of pocket. So the earnest money is the first time that you're expected to pay money out of pocket. And that's really important because most people think that, I'm just going to send the money as, whenever it closes. But that's if you negotiate for earnest money, and especially here in San Diego, earnest money is very common. Um, just be ready for that mentally. To part ways with a few $1,000s. My earnest money, I believe, was 10 grand for the home that I'm in right now that I ended up buying. Now, the next step is the home inspection, right? After your earnest money is deposited, the next step is scheduling a home inspection. So that's when you pay for a home inspection, and the home inspector comes out. They check out the condition of the property, if it's safe to live in, and what repairs need to be done, right? And then we roll into the next step, which is the appraisal. Sometimes the appraisal happens after the inspection. Sometimes they happen concurrently. Now, with a VA loan, as opposed to only looking at the value of the home, they're also looking to see if it's habitable. Certain things have to be met in order for it to be habitable, and that's kind of where the home inspection and the appraisal comes in. An appraiser that is certified by the VA will come to your home, come to your future home, and assess the value of the home, determine if repairs need to be done before you move in, and essentially what the value is, either if there's no repairs need to be done, or the value of the home, what it appraises at, subject to those repairs. The VA does this to protect us, right? So protect us veterans from getting into a bad deal I wouldn't want to go into a home where the sewage doesn't work, right? Or if there's no running water, no electricity, etc. I wouldn't want to walk into a transaction like that and walk into a home that I want my family, my kids to be there. I wouldn't want that. So that's another way that the VA protects us as buyers. Now, step 7, right? Underwriting and loan approval. We already do some of this. Most lenders don't. We already do some of this before the offer is accepted. So we partially underwrite your pre-approval. Um, so after the contract is accepted, the rest of the underwriting happens. So basically, you're given a conditional approval and then a final approval, and then after all that is said and done, you receive the last disclosures that you need to sign, and after that, it's time for the final walkthrough, right? Now that all the hard work is done, you go into the final walkthrough. You walk it one last time with yourself and your realtor, and that's basically just formality, right? Hopefully no none of the pipes burst, between the appraisal and between the final walkthrough. That would probably suck. Um, that's the last time that you don't own the home, right? That's the last step of the process before you are actually handed the keys by your realtor, right? And then step 9 is the day that we've all been waiting for, right? Key day, right? You did it. You finally bought your home. You signed some last papers, and your realtor hands you your keys. You take a few photos for Facebook, and you can brag to all your coworkers. Congrats, you're now a homeowner, right? Um, and one last thing, right? If you found this information helpful, please like and subscribe to my channel. It's the way that I can get ahead of other veterans and service members to promote, how awesome the VA loan is for benefits, the benefits of the VA loan, all the other benefits that are associated with your military service too. I don't just cover the VA loan. I also cover other benefits of home ownership, Chapter 31, GI Bill, disability ratings, all that. So I would love if you can like and subscribe to my channel. That way I can get ahead of these veterans and I can present this information and help make this world a better place for us. And one last thing. You fought for the American dream. Now start living it. My name is Matthew Ayala. I'm a loan officer, a Navy veteran first, and also a loan officer. Have a great day, everyone. Take care. Bye.